Thanks for joining us. We are joined right now by Brian Hoops. He's with Midwest Market Solutions, and he is based in Springfield, Missouri. And Brian, we have a big jump of all things in the wheat market today, leading the charge higher. And I wanted to jump right to that first. Let's take a look at our Chicago and Kansas City wheat trade. And in Chicago wheat, we have September 13.5 higher at 504.5. And that's even after it backed off of its high by a couple of pennies here. We have the December 12 3/4 higher on Kansas City wheat so far today. Here you have the September contract up 17 3/4 cents. Last trade now 501 3/4, and you have December 17 higher at 523 1/4. What about Minneapolis wheat? Well, on the spring wheat market, we have September now trading 14.5 higher at 549 3/4. So, Brian, my question to you is, what took the spurs to the wheat market here in the last half hour?
Yeah, it's almost impossible to see a day-to-day trend in the wheat market. It's a very volatile trade, sharply higher, sharply lower one day and the next. Today, we are seeing some spreading activity. It's being led by the Kansas City market. Harvest is really starting to wrap up there, and that's what we've been expecting and telling clients that we think Kansas City will lead the upside momentum here against Chicago or against Minneapolis. And the spreads suggest that we continue to try and move higher here. There's some concerns about not only the U.S. Production side of things, but also EU unions and mainly Russia, as our wheat crop is being lowered. That's going to take them out of the export market to a small extent, and that could give us better chances for exporting our U.S. wheat. So we do look for Kansas City to lead any upside strength here at the Board of Trade, and should be a lot of spread activity, long wheat against maybe short corn or short soybeans because of the tariffs.
Well, the second strongest today is the corn, and let's take a look at what it's doing right now in Chicago. We'll start with a look at that September contract, and right now on the corn board, we are currently trading about 3 1/4 higher at 355 1/4. Corn started out fairly flat on the day and firmed up after that. We have December new crop corn up 3 at 367 1/4 right now. That's about almost 3 cents off of our earlier high put in this morning. And now let's take a look at the soybean trade. That one's been going the other way. We are coming off the lows, though. August soybeans down 3/4 now at 847 1/4. And we have the November now back to unchanged at 864 1/4. So it seems like once that wheat market took off, it actually drug the soybean trade higher by about a nickel off of its earlier lows this morning, Brian.
Yeah, it did. Wheat's pulling corn higher, and that's pulling soybeans higher as well. Beans did make some fresh contract lows early in the trade. We had a private export sale announcement of corn this morning. Corn trying to find some support off of its lows that we go back to all the way back into June 18th timeframe when we made that sharp spike low. So we're in this kind of a trading range in the corn market and in soybeans to an extent. Wheat's trying to lead everything higher at this time.
Okay, we'll pause for a break, and we will come back and talk more about the markets in just a moment. Don't go anywhere. We'll be right back.
From a search.
Well, we're going to talk more about the markets related to the ag trade, but also these outside markets like the Dow Jones Industrial Average this morning. We pointed out that there was some jobs data that came out this morning and showed a continuing strong jobs factor around the country. In fact, boy, you probably have noticed, as we have here, it seems like about every business has a help wanted sign in the window these days. The jobs numbers came out this morning, and the Dow has been reacting. It was up well over 100 points in the early going. Right now, it's up about 95 at 24,269. And on the dollar value, we have the U.S. dollar index on the September futures now quoted at 94.110. So that's down exactly 300 points from where it was on Tuesday. Now let's take a look at the crude oil trade. That's the one that has been bouncing around here. We currently have it mixed. August down 17 cents. We're at 73.97 per barrel, but September 13 higher, and the deferreds are anywhere from about 40 to 60 higher on the West Texas crude. That's price per barrel, of course. Let's take a look at our live cattle market as it stands right now. And on the futures trade at the CME Group in Chicago, we have the August contract 55 higher at 107 even per hundredweight. October up half a dollar at 110.60. And if we look at the feeder cattle trade this morning, we have the August contract there now trading a dime higher at 152.90. September 23 higher at 152. $52.83. It's about a half a dollar off its earlier high this morning. Brian Hoops rejoins us from Midwest Market Solutions. So we have a firmer tone here in the cattle market in the early going, but it is kind of fading away from its earlier fairly solid start there. Does that concern you at all, Brian, or what kind of footing are we on here?
Yeah, I think we have to be a little concerned in this market environment here. We are looking at, holiday type of trade where we've got 4th of July and then demand starting to fade as we go through the rest of the summer. This is going to be our weakest demand period, and we may see a loss of some of our exports with some of the tariffs that we've been in place with Mexico, Canada, the EU, and China, of course. So it's a time that I'm very concerned that we probably put a low in earlier this spring, but now we're starting to see this market here try and recover. But how high can we recover is going to be, I think, very limited by our lack of exports and our stronger demand base throughout the summer.
On the lean hog trade so far today, let's take a look at our futures and see if they're hanging on to the gains that we had from Tuesday. Right now on the big board in Chicago, we have the August contract 45 lower at 75.55. October down 48 at 59.30, so they're slipping away from the earlier highs. We have October 90 cents off its high. What does that mean today, Brian?
Well, yeah, concerns about the product market, and again, same thing here kind of as the cattle, that we are concerned about demand going in through the rest of the summer. Now that 4th of July grilling season has kind of wrapped up, we're into this period here where there's really no holidays until Labor Day, where you can start to see some demand once again with the very hot temperatures across a lot of the Midwest and the eastern part of the United States. That usually limits our demand base and our grilling as well. So we're entering into that period here where we've got large supplies, and if our demand does start to slack off as we expect it will, we're going to see prices weaken from these price levels.
Okay, thank you, Brian, for visiting with our audience today. Brian Hoops of Midwest Market Solutions. He is based in Springfield, Missouri. He said it was hot there, too.